Good afternoon, everyone, and welcome to this Nadex webinar, an introduction to short-term price action. This is the first part of a two-part series. The first part, we're going to go over binary options. I make this a two-part series. Most people come to Nadex looking for access to binary options, and we are going to go through trading binary options. What are they? How do they work? So you can really understand how what impacts the price of a binary option? What are you actually trading? What markets do you have access to? Things of that nature. We are going to go through binary options today. Next week, we'll do part 2 of the series, which we'll step into other Nadex products, namely knockouts and call spreads. I almost forgot what they were for a second. Knockouts and call spreads. So please join us next week, to do just what we're doing today, but with other products. All right, before we get into it, let me go ahead and this is going to be, it's going to start off as a slideshow, and then we're going to get over to the platform and we're going to roll up our sleeves and dive into it a bit too. So it's not just going to be some educational content around the products, but we're going to step in and see if we can't apply some of what we've learned and show you actually how to go about doing it at Nadex. Before I jump into any of this, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is also an educational session. Please do not take anything I say as a buy or sell recommendation. I'm doing this for your education purposes, and that becomes much more relevant when we do the off-roading portion of this webinar, namely when we jump into the platform. I will be in a demo environment, but we're going to be clicking around. I don't want you to take any of that as an indication to buy or sell anything. I'm going to be just demonstrating the products in the platform. Now, what are we going to go through today? One, I am going to, because a lot of people we've had, and I can't even begin to tell you how many thousands of new participants into Nadex markets that we've had. Retail customers, retail traders are looking to get into the price action. The markets have been busy. We all hear about it. We've been in COVID lockdown. So I do like to start with a few minutes on who is Nadex before we jump into what is a binary option. We will cover that, and then I'm going to walk through how they work. And I'm going to walk through some examples, some slides where you can really understand the risk versus the reward of these and the price. What are you actually trading and what impacts that, and what market conditions could change the price of a binary option? And the nice thing there is, around all of that, Nadex provides choices. And we're going to go through all the choices, which to people who might trade binary options outside of the United States, we're going to discuss that a little bit. Something that differentiates Nadex is the fact that we offer a variety of choices, not just one. And then, as I mentioned, we're going to do a practical demonstration. Now, this is an interactive session. I've got a pretty decent group of folks on here. Please, if you've got a question, type it into your questions panel. I will try to get to them as we go through the session. I'll keep my eye on that box, but in the end, if I haven't gotten them, I'll try to peruse them and answer them as well. But if for some reason, hopefully, the reason I like to say that, one, is if you have a question, there's a high likelihood someone else on here has the same question. And two, if for some reason I miss somebody's question, I'll give you some contact information. At Nadex, we're here to help. You can definitely reach out to us, and we can hopefully clear up any challenges you might be having. So let's go ahead and so please feel free to type questions into the question box. You can fire them off at any point, and especially if I start rambling and get off track. So who is Nadex? Nadex is actually an acronym. It's an acronym for North American Derivatives Exchange. Nadex, the entity has been around for many years. It became Nadex a little bit more than 10 years ago when IG Group bought them. IG Group, a very large broker out of global broker, but out of London. And by the way, IG just made a very large acquisition in the United States, if you're not paying attention, but they just spent $1 billion to buy Tasty Trade and Tastyworks. So IG is making a very concerted effort that they are coming more into the North American, specifically US markets. Now, what is Nadex? There's one word in there. I've highlighted it, underlined it, bolded it, and that's the word regulated. Nadex is a CFTC regulated electronic exchange. Now, why do I emphasize that word regulated? The reason is, as I mentioned, there are other binary option providers out in the world. You're generally not supposed to be able to access them from the United States. There are only right now 2 operating binary options exchanges in the United States. The other one is a very small one that offers weather contracts, So Nadex is the premier binary options provider exchange in the United States, and we are regulated. And we are regulated by the CFTC, the Commodity Future Trade Commission. And the reason that's important is some people do access other binary option providers who are offshore. And when you're dealing with an entity that is offshore, is not regulated in the United States, my advice would be caveat emptor, buyer beware. If you had any type of challenges, problems, or wanted some type of recourse, I wish you luck. With Nadex, we are properly regulated. We have to adhere to all the rules, regulations, and laws of the United States. There is nothing nefarious going on here. We are completely regulated like any other exchange in the United States. By reporting into the CFTC, we report into the same regulator, and we have the same laws that we have to adhere to as the very, very large futures exchanges like the ICE, the Intercontinental Exchange, who bought the New York Stock Exchange, or the CME, the Chicago Mercantile Exchange. We are regulated. We have to adhere to the laws, rules, regulations of the United States, and that is something that makes Nadex different than any of the offshore binary option providers. All right, 2, Nadex was designed specifically for retail traders. That is who we are seeing flocking to our markets. Now, what do I mean by retail traders? Is we have very low notional value, low notional dollar contracts, meaning it is a very low cost of entry. You do not need thousands of dollars to access price action in the markets. At Nadex, you can do so with just a few $100. And because everything that we've got is very clearly, distinctly defined risk reward before you even get into a trade, there is no such thing as margin calls, things that you would have to adhere to, or you might get caught in other futures environments, for other futures exchanges, larger futures exchanges. At Nadex, you cannot lose more than what you initially put into a trade. Everything is defined risk. There are no surprises, because generally a surprise to a retail trader is something bad that blows you up. You know exactly what you're getting into potentially on the risk side as well as the reward side before getting into a trade. And the one thing that Nadex does offer is binary options, where people are looking for short-term price action. Now, next week we'll cover call spreads and knockouts, but this time we're just going to talk about binary options. So let's jump into it. What is a binary option? And a binary option is a short-term defined risk reward contract. And that contract is made up of 3 components. Okay? And those 3 components are an underlying market, a condition, and we're going to talk about that in a second, and an expiration time. Now, this is when I talk about how Nadex has a variety of choices, very different than offshore binary options exchanges. When it comes to an underlying market, that is, and what people come to trade at Nadex, one, we've got foreign exchange markets, right? All the top foreign exchange currency pairs. We also have equity indices. So if you want access to short-term price action, say in the S&P 500 or the Nasdaq or the Dow Jones, we've got that, as well as some international equity indices. And then we also have other markets like gold or oil. So some commodity markets with energies and with precious metals. So you've got access to a variety of markets. Now, when I say a condition, a binary option, I call it a condition. It's also sometimes referred to as a strike price or a level. So these are all just, they all mean the same thing. And it's always going to be couched as, will it be greater than? That is the condition. Will this market be greater than? So will oil be greater than $62 a barrel? All right, we're going to give you a bunch of conditions. At Nadex, there are a variety of conditions, not just one condition, but we'll give you a variety of conditions to choose from, and I'll explain why that's useful or important. And then there's an expiration time. That's something else that Nadex does. So you've got 5-minute binary options, you've got 20-minute binary options, you've got 2-hour binary options, you've got daily, you've got weekly. So we offer a variety of markets, a bunch of different conditions, and a bunch of different expiration times. But that is what a binary option is. It's a market, a condition, and an expiration time. For educational purposes, I'm going to pick one as an example for this session. And because it's been so volatile, I'm going to just do oil. So an underlying market, a condition, and an expiration time. Will oil be higher than $62 a barrel at the end of today? Okay, that's your statement, a binary option with its 3 components. And it doesn't matter whether you're buying or selling a binary option, and you can sell. Something else that differentiates Nadex, and that actually comes in really important later as well, but you can buy or sell them. And it doesn't matter whether you're buying or selling, your risk or reward, potential risk, potential reward, are both known. They are known commodities or quantities before you even get it into a trade. Okay, so you know exactly what you're getting into, and a binary option will trade between 0 and 100. Okay, I'm going to get into that next. Let's talk about that. So now that we know that it's a statement, it's essentially a true or false prediction. Will oil be higher than $62 a barrel at the end of today? And either the event happens or it doesn't. All right, it's either true, hey, oil finished, settled above $62 a barrel at the end of today, it's true. No, it didn't, it's false. That is why it's a binary option. There are only, in the end, 2 outcomes. It is either true and it settles at 100, or it is false and it settles at 0. Okay, so you've got these binary options. It's a market, a condition, and then an expiration time. It's going to trade between 0 and 100. And in the end, it's a true or false prediction, yes or no. And if it's true, it goes to 100. If it's false, it goes to 0. Now, what are you actually trading? What does that price represent? And that price can be thought of as the probability that the event is going to be true at that moment in time. Okay, and that is determined by the marketplace. So let's just use oil for an example. And I think oil is actually trading right around $62 a barrel, so this should kind of work. Oil's trading at $62 a barrel right now, and it is it's midday. Is oil going to finish above $62 a barrel? Yes or no? And it's currently trading at $62 a barrel. At the end of the day, it could either be higher or lower in an equal probability. I don't know. We're right at the same price. When that happens, it's essentially a 50-50 proposition. There's a 50% chance it finishes above, or a 50% chance it finishes below. Now, those probabilities will move, and we're going to get into that. But right there at a 50-50, you know exactly what you're getting into. You can buy a 50 binary option. It's got 50% chance of it going to 100 and a 50% chance of it going to 0. Now, the cool thing about Nadex binary options is that's also the dollar amount. When I mentioned that we have low dollar amount contracts, our contracts are each worth $100. So when you're looking at the probability, you're also looking at the dollar value of the contract. If I were to buy a binary option for 50, I've risked 50. I can't lose any more than I initially put in. So I just spent 50. I'm risking 50. And if it goes to 100, I would make 50 because, I mean, if it comes true, it goes to 100 and I make 50. So I risked 50 to make 50. If it came in false, it would go to 0 and I would lose my 50. So now, it could also work the other way. And I want to mention this because other binary option providers don't even offer this choice. What if I think it's not going to finish above 50? I think oil is going or not above 62. I think oil is going lower. I mean, I could buy it if I think it's going higher. I can sell it if I think it's going lower. If I sell a binary option at 50, all right, my hope is that the statement is false. I'm predicting that it's not going to be above that price. And at the end of the day, at the very end of the day, if it's at that price or lower, so it's not above, it needs to finish higher for it to be true. If it's at that price or lower, it's a false, it goes to 0. I sold it at 50, it went to 0, I made my $50. Now, if I sold it at 50 and it became true, it would go up to 100. I sold it at 50, it went to 100, I would lose 50. So hopefully people understand that concept. If there's any questions, now the nice thing about that is you don't have to be able to do the math at any moment in time. I mean, these markets move very quickly. It's on the order ticket. So a binary option, it's a market. It's got a condition, it's got an expiration time, it trades between 0 and 100, and it's binary. It's either true or it's false. If it's true, it goes to 100. If it's false, it goes to 0. And what are you trading? You're trading the probability of it being true at that moment in time. And if I think it's going to be true, I buy it. If I think it's going to be false, I can sell it. And now, if you trade other options, what's going to impact that probability? How is the marketplace going to impact that probability? Well, how much time is left and volatility will impact the probability number. If there's a lot of time left, there's a lot of time for something to happen. If there's a little time left, very little time for something to happen, I am going to go through examples specifically of that. And if there's low volatility or high volatility, that will also impact it. We are going to walk through that. So just a recap on the price, okay, and the risk reward. It trades between 0 and 100. We know that's the probability, but we also know that it's $100 contract and that the probability number also turns into the dollar value. And what you have to put up, what you're risking is your maximum risk on the trade. So if you're buying, that's your risk. If you're selling, your risk is 100 minus what you collected. So if I sold, okay, oil is trading at $62 a barrel. Will oil finish above $64 a barrel? It's got to go up $2 a barrel, which is a pretty big move. If that binary option were trading for a 20% probability, I could sell it for 20, right? I could potentially make 20. And there's a 20% chance it's a 20% chance that it's going to be false. I mean, 80% chance it's going to be false. 80% chance it's going to be false. There's only a 20% chance that it would be true, that it would go up $2 and finish above 64. So if I were to sell it at 20, way up there, my risk would be 100 minus the 20 because I sold it at 20, it could go to 100. My risk would be 80. And that's what you have to put up. You put up the most you could potentially lose, and after that, there is simply no more there's no maintenance margin, margin calls, or anything like that. You know exactly what you're getting into before you enter a trade, and you can buy it or you can sell it. And it's very clear and it's calculated on your order ticket before you enter a trade how much you could potentially make and how much you could potentially lose. Okay, and I think, okay, good. And I love that people are asking questions. I think I covered your answers. Yes, okay, cool. All right, if you've got, and again, if anyone else has questions, because I'm going back over this a little bit because I'm getting questions for clarity. Let's look at an order ticket because I think this will actually handle a lot of this for you. When we're looking at a Nadex order ticket, what do you see on an order ticket? Well, one, all right, so this is actually an order ticket for the NASDAQ. Okay, this is the US Tech 100. You're going to get an indicative price. At the time that I took a picture of this order ticket, the NASDAQ was trading just above 13,000, 13,068. You're also going to get the condition. And this is what all of our binary options are going to look like. Will the US Tech 100, will oil, will gold, will the Euro US dollar, okay? So here, will the US Tech 100 finish higher than 13,120 at 4:15 p.m.? And in the upper right-hand corner, you can see it expires in 22 hours and 5 minutes. Now, on the order ticket itself, you're going to see a bid and an ask. All right. If I think no, it's not going to, I see that we're currently trading at 13,068. I don't think it's going to get above 13,120. The market is right around 40. Okay, is right around 40. So right now they're saying there's about a 40% probability. That's the middle of the bid ask, that it's going to be true. 60% is going to be false. Now, if I say no, I could sell it at 39.75. If I think yes, I could buy it at 42.75. Now, I will tell you, this is a central limit order book. I do not have to trade on those prices. If I wanted to try to buy it for 40.25, and you can see in my order ticket right below, I can use a limit order to try to buy it. Now, I can, and this is what a marketplace is with a central limit order book. Anyone can put a bid in, anyone can put an offer in. I could bid below, I could bid in the middle. I can sell above, or try to sell above, or I can try to sell in the middle. Now, does that mean my order is going to get filled? No. I'm just putting an order to trade at a price. It would have to get to that price, and someone would want to have to trade with me in order for it to happen. But I'm allowed to advertise my price if I want. If I wanted to try, I think, okay, NASDAQ is trading at 13,068. Will it be above 13,120 in 22 hours? Yeah, I think it's going to go higher. I could try to buy it at 40.25, and I could advertise my bid to buy one. Okay, and I can say, hey, I'm willing to buy one. Now, someone might sell it to me or not. And that's the difference between a limit order and a market order. If I put in a market order, it would go to buy at 42.75 right away, and I'd buy my one. If I put in a limit order, I'm just trying to buy it at a price. It doesn't necessarily mean I'm going to get it, but I might get it at a slightly better price than paying $42.75. Now, when I try to put my bid in, it tells me exactly, if you buy this, the most that you could lose is $40.25. And if you do this, the most that you could potentially make is $59.75, excluding fees. So it does the math for you on the order ticket, so you can see what you could potentially make or what you could potentially lose. And again, you can place a bid. I could join that bid at $39.75. I could put a bid lower. I can put a bid in between. So this is what a central limit order book means. Anyone can put a market out there. Now, I do want to mention there's a couple of numbers that people always ask. Yeah, and I'm even getting the question right now. On the bid side, the sell 39.75, you'll see a little 100 in the left-hand corner, and you can see in the buy side a little 75 in the upper right-hand corner. That's the number of contracts that are there. If I wanted to sell at 39.75, there are currently 100 contracts bid there. I could sell 100 at 39.75. If I wanted to buy at 42.75, I know for sure, well, at least right now, there are 75 there. If I went to buy 100 at 42.75, I might only get 75 of them. I might not get all 100. Now, sorry. So you know that you know how many are there. There could be more, but these markets do move pretty quickly, but that's what those numbers represent. Now, in terms of placing, because I'm getting questions about limit versus market orders, it really all depends. If you're trading a binary option, this has got a day to go, 22 hours to go. The volatility might not be swinging around, and price might not be changing a lot. And we're going to go through examples of that right after this slide. You might try to buy in between. You might be able to save yourself a couple dollars. It might be worth it to try. Now, you could scare somebody away. You could put your bid out there and somebody goes, no way, someone, who knows? I mean, if I tried to buy 300 of them at 42, someone might go, what does somebody else know that I don't know? So it all depends on how what's going on. When the markets are moving around a lot and there's a lot of volatility, people tend to use market orders because they do want to, get filled. Now the question is how long do you leave it out there? And quite frankly, that's going to be a personal decision. It really depends on how much you really want to get into the trade and how much that extra dollar means to you. So if you really think this is a great opportunity, you want to buy right here. Does it paying 42.75 or 41.75? I don't know. But if you really want to get into a trade, the prices you see up there, that you could trade at them. I've also seen times where someone goes in to buy at 42.75 and they actually get filled lower because as soon as they put their buy order in, it takes microseconds for someone else's sell order to come in, and they run into each other. So sometimes you get filled better. Now, in regards to what other people are willing to pay and what other people are willing to what they're willing to sell it for, what they're willing to buy it for, this is what a central limit order book is. What you see is what you get. All right, and you see right now there are 100 bid for it, 39.75. If somebody else wanted to buy 100 at 40, they would put it in there and that would be displayed. There are no hidden orders. No one. And if you want to see market depth, what's below 39.75 and what's above 42.75, there's that show market depth button right in the middle, and I could demonstrate that later, and you'll be able to see. Hold on one second. All right, I will get to these other questions in a second. I might have to come back at them. I love that they're all coming in fast and furious, and I want to try to stay the course. But you see the market. You see what the bids are. You see what the offers are. You can join the bid. You can middle the market. That's what it's a very transparent marketplace, and so that everybody can do what they want to do now. And so that's what you see is what you get. Okay. So I wanted to go through the order ticket and also so people understand. And if you want to fill, a market order will get you a fill. A limit order will get, you get your price. Hopefully, you might not get a fill. You could put a limit order out there and not get filled. You can miss it. It's called whiffing. Ooh, I tried to buy it and it moved and I didn't get it. So it all depends on what you're trying to do. You've got to make that determination. So central limit order book, full transparency. Okay, let's keep moving along because we've got a lot more to cover. And I will cover, I see the other questions. We're going to cover those when we jump into the platform. Now, I do want to we're going to go through this. I'm not going to spend a lot of time on these examples, but I want to share with you how binary option prices change over time, given time and given volatility. And when we do an example, I am going to do a 5-minute binary option so you can really get a feel for binary options on steroids for people looking for that fast short-term price action and how quickly these markets can move. I will do a demonstration of that, but I really want you to understand how all of it could potentially play out in different market conditions. So we already know that the price is roughly reflecting the probability of it being true. But the interesting thing is a price of an underlying binary option does not have to move in line with the underlying market. That is very different than knockouts, which we'll cover next week. But which, and that's one of the reasons why people love knockouts. They're so intuitive. You're just trading the price of the underlying, period. Here, we're trading a probability. And because that probability will be impacted by volatility and time to expiration, let's walk through some examples. All right. So here's an example. All right. Here is a chart of the euro US dollar, and there was a binary option. Will it be greater than 1.14 at 3 p.m.? And you can see this chart goes up and down, up and down. It's pretty volatile, and there is the 1.14 level. Now let's take a quick look at the price of the binary option. Will it be greater than 1.14 at 3 p.m.? Because remember, it's going to be yes or no at the end of the day throughout the day. How did this binary option price throughout the day? Now, at the beginning of the day, and I'm going to just use the middle number because that's the middle of the bid ask, it was trading at 56. Now, why was it trading at 56? It was already above 1.14. It was already above it, so it's already got a head start. The probability that it will finish above 1.14 at that point in time was 56%, meaning there was a 44% chance that it would not, that it would go to zero. Now, this is a volatile market. It immediately drops all the way down, but it drops below the 1.14 level, but the price of the binary option only went down to 44. Why is it at 44? Well, it's below 1.14, so now it's essentially behind. It's got to get up to 1.14 just to be 50-50, but there's still a lot of time left throughout the day. All right, there's still early in the day. Now, skip forward to midday, and it's basically at the same place. The price of the underlying is at the same place, but what has happened to the price of the binary option? The price of the binary option decayed. It went down to 36%. Why 36? Well, it's at the same level it was before, but half the day has gone by. There's half as much time. So now there's less time for it to finish. And remember, it has to finish above. I mean, what happens in the end? It has to be higher than 1.14 for this to go to 100. Now, what happens? It jumped. And now notice that it made a big move, right? It went all the way up to 74%. It's a little higher than it was when we started the day. But notice here, now we're well above 1.14, and it really gave an indication, and it moved quite a bit, right? It jumped 40 points. Then it drops down. Now notice, it did not drop down as low as where it had come from, but it got smashed down to the 24%. At this point in time, there's only a 24% chance that it's going to finish above 1.14. Now, you don't know what's going to happen, but there's a lot of volatility. This is a volatile market. It is going up and down and up and down. It's going through there. And in the end, it went to 100. Any place above 1.14, it goes to 100. Any place at 114 or lower, it goes to 0. Okay, this is how volatility impacts and time impact the price of the binary option throughout the day. Now I'm going to go through low volatility. What happens if it doesn't move at all? And here's the same scenario. Will the euro US dollar be greater than 1.14? And it never gets above that level throughout the day. And notice how it just rots away and decays. And this is low volatility. All right, it's just a low volatility environment, and as it got close to the end of the day, it just became less and less likely that it would finish, and eventually goes to 0. And the converse of this, all right, the flip side of this, And by the way, I'm recording all this. If you want to go, you'll be able to see the recording and play these examples back. Would be it stays above, right? In a very low environment, it stays above. It's a higher probability. It's 54%. Notice how it actually trades a little lower. And this is actually rather important. The price of the underlying went down, but the price of the binary option actually went up. How could that be? Well, yes, it went down, but it's very low volatility and it's above one spot 14 and it's just decaying on its way up to 100. All right. So and it just kind of, and then eventually notice on the last at the end, it actually goes down. It went from 80, all right, but the price of the underlying went lower. That price of the underlying could have even gone a little lower, but when it settles at the end of the day, boom, it's either yes or no. So isn't that interesting? The price of the binary option does not have to move in line with the price of the price of the binary does not have to move in line with the price of the underlying, because we're trading the probability of it finishing above or finishing below if you're selling. So I just wanted you to kind of see high volatility, low volatility, how the price of a binary option can move. And we're going to walk through live examples and really see that. I did mention this up early. This is something that differentiates Nadex from other binary option providers, is that we've got all these different time frames and conditions. And if times are really volatile, we'll even add. And this is just an example of the euro US dollar, but you'll see for the euro US dollar on the left hand side, there's every 2 hours. Every 2 hours we've got binary options settling. And then it's every 2 hours. Then we've got the 12-hour, the 4-hour windows that come in later. So we have a lot of different settlement times, so you can choose the time frame that fits your trade. A lot of people will trade binary options around a news announcement, and if that's the case, they might want to choose the window that contains that news announcement because it'll be a shorter term binary option. You've got to find the time frame that works best for you, and then on top of that, we offer a bunch of different conditions. So you can choose, and you can actually do strategies. And there are strategies where you mix and match binary options. If you think, hey, I think it's going to finish in a range, there's ways for you to trade multiple binary options at once. And we cover that in other strategy sessions. But you get to pick, and each one of those is going to have a probability level. And you can see the higher the price, the higher the condition level, the lower the probability. The lower the strike price, look at the bottom where it says one spot 525, the higher the probability. I mean, they're almost telling you this is a lock, that there's a 96% chance that it's definitely going to finish above one spot 525. So we give you those levels. You can choose which level, which condition, and which time frame suits your trade the best. Now, if you take nothing else away from this session, this is a flash, news alert, news alert, news alert. All right. An important rule when trading binary options. I hope I have your attention, because if you take nothing else away from today, this is probably one of the most important things that you're going to learn today, right now, is just because there's an expiration associated with the contract does not mean you have to wait until then to see what happens. You can choose to exit your position early if you want. Right? And that is really important. And this is when people are looking for short-term price action and people want to day trade. If you looked at that example that I did of the high volatility euro US dollar, where it was jumping above and below one spot 14, you could have traded on all of those. If you thought that was going to be the bottom and the top, you can trade back and forth. Just because there's an expiration associated with the contract does not mean you have to wait to see what happens. You can choose to exit your position early. Why would you do that? One, you would exit it to lock in a profit. Okay, I bought a binary option with a 40 probability, 40. and it went higher and it went up to 60. It looks like I'm gonna win. It's 60. I got a 60% chance of it going to 100, according to the market. But anything can happen. Could you sell that back out and take your $20 profit? Yes. You're allowed to buy it at 40, sell it at 60, and reassess. And you can make a determination. Now, you could also do this to limit losses. I bought one at 40. It went to 20. I made a mistake. This is clearly not going to go higher. It looks like I was wrong. I'm going to sell it at 20. I don't want to lose all 40. I'm going to minimize my losses. I'm going to take my $20 loss, take my lumps, and move on to my next trade. So you can exit a position early. You can do that to either lock in profits or limit losses. Now, I've got a variety of questions. I mean, I've got 6 of them in here right now. So know that you are being joined. Is how do you exit early? And I am going to show you on the platform how to exit early. And in fact, I'm telling you now, I'm going to tee it up. We've actually got some functionality that's going to be coming out soon that's going to be close my position, a button where you can say close my position, and it'll send a market order to close your position just to get out of your trade, and you move on. But I'm going to demonstrate that. So hang on to those questions. And I will tell you, when you see the volatility of some of these options, some of the best traders and the people that are most successful actually get out early. They minimize their losses. I traded, I'm losing, and maybe if they hit a $25 losing threshold, they'll say, okay, uncle, I give up, I'm out. But if they get into a trade and they're making money, they're not looking for that last couple of dollars for it to go to 100, or because anything can happen. It all depends on the time frame and the market conditions, and you've got to make those determinations. When I show you a 5-minute binary option, I think you'll understand why you may or may not want to try to exit early. Okay, and this also comes out as, what about stop losses? With the binary option, because it's got defined risk in it already, that essentially is your stop. You can't lose any more than that. We don't currently have a stop loss order where if it gets down to a certain level or up to a certain level because you bought or sold, that it unwinds your trade for you. You're going to actually have to monitor that yourself. But the fact that these are less than $100 contracts with defined risk, defined reward, they essentially have a stop built into them, as do our call spreads and knockouts. Now, that being said, we are working on functionality for that. Okay, now, again, I want to emphasize this. You do not have to hang on to these trades all the way to the end. You can choose to exit early. And then, by the way, just so we're clear, if you bought a binary option, the way you would exit early is you would simply sell it. Hey, I bought this, I'm going to sell it. If you sold one earlier and you want to close it, you simply buy it back. I'm short one and it moved. I want to close it. I'm going to buy it back. Okay, and I'm going to show you how to do that on the platform. In fact, we are right there at that part of the session where we're going to spend the next 15-20 minutes on the platform. Now, I've answered a lot of these questions. I'm going to finish up some of these when we're on the platform. But if I happen to miss anybody's question, Nadex is here to help you. We really are. Listen, we can't be successful unless you're successful. And we want people to be successful. We want people to have a good trading experience. If you're having a problem with your account, if you're having a problem understanding something on the platform, or you'd like to know a little bit more about our contracts, while we do have a lot of education on our website, as well as on YouTube. I can't emphasize that enough. Go to our YouTube channel, subscribe to it. I will also tease up, if you're missing it, every morning at 8:45 a.m. Eastern, 7:45 a.m. Central. So 45 minutes before the U.S. equity markets open, we do a 15-20 minute live stream on YouTube where we look at hot spots in the market. potential hotspots. Where might you want to be looking? Where might there be volatility? You can watch that every single day. If you miss it, they're always recorded too. You can watch them immediately after they immediately get posted up there. Check out the YouTube channel, and hopefully you could join us for those live sessions to get some potential ideas on where you might want to be looking. But if there's anything that I don't get to today, email us. Please email us, customerservice@nadex.com. And again, we're on social media everywhere, but I really want to push that YouTube. I think you'll find a lot there. The other thing I'm going to, oh, what happened? I paused my, hold on, give me 1 second here. Oh, that's strange. All right, I just lost my, I know that you can see it, but I need to share this screen again because it paused on me right at the very end. That's really strange. Odd. That's never happened to me before. It shut me down. Okay. I did want to put this up. If you're new to Nadex, or if you've been around a while and you haven't taken advantage of this, we do have a refer a friend program, right? Where you can refer up to 10 friends and get $100. You invite your friends. You've got a specific link. I'll show you where you find that on the platform. You send it to your friends. If they sign up and place 5 trades within 30 days of opening their account, you'll get $100, and your friend you'll get $100, and your friend will get $100. So you each get $100. All they have to do is open an account, place 5 trades within 30 days. You each get $100. You could do that up to 10 friends, so you can eventually get up to $1,000 if you invite 10 friends. They open an account and place 5 trades within 30 days. But you want them to use your refer a friend link, which you can get when you're logged into the platform. All right, I'm now going to shift, and we're going to jump over to the platform. And this is where I want to make sure that I get everyone's questions answered. I gotta drink some coffee. I'm choking a little bit there. Okay. We are now looking at the Nadex platform. And I am only going to be covering binary options. I'm not doing a full depth functionality analysis. We do have sessions where my colleague Adam McCaden, who's head of product, goes through all the functionality. If you were curious, excuse me, where you found that refer a friend, by the way, it's up in your account section. In your account section, you find your refer a friend, and you would be able to refer a friend. Now, I'm in a demo environment, so it doesn't exactly work. Now, if you don't have a demo, I recommend that you have a demo account. You'll notice that it does say demo up here in the right-hand corner. If I were live, this would say live. I do want to be clear. A demo environment, while the prices are very, very similar to what's in the live environment, your experience in a demo environment is going to be distinctly different than live, because there are thousands of more people looking at a live environment, all looking to trade. A demo environment's only got people in demo, and people behave differently in demo. I might, in demo, buy 50 contracts or sell 50 contracts, but in real life, I would only trade 2 because I don't have that kind of money in order to swing around. I don't have $5,000, or whatever, to throw around on a trade. So your experience in demo is definitely going to be different than live, but you can certainly you can learn how to maneuver around the platform, and you can learn how the products work. Now, in binary options, you can see equity indices. All right, I've mentioned that we've got the Dow Jones, Wall Street 30, US Tech is the NASDAQ 100, the small cap is the Russell 2000, the S&P 500 is US 500, but we've also got the DAX and the FTSE. So we've got a variety of equity indices you can look at. I mentioned all these foreign exchange pairs, and look at all the different settlement times that we've got. I mean, it's just choices. Some people think it's confusing. We like to give people the choices because people do want to choose the right product and the right time frame for their trade. And that's one of the cool things that Nadex does. With the commodities, and this is oil, gold. If you're not familiar with those markets, we're going to be doing a boot camp that talks a bit about those, and there's going to be a session on fundamental analysis in those that's included that you might want to catch the recording later. I mentioned we have 5-minute binary options and 20-minute binary options. Let's do a 5-minute binary option example so that you can really see what happens to a trade. Here's the Euro US dollar, and I just want to get this chart. You know what? Maybe there's 3.5 minutes to go. Wow. Oh no, there's 4 minutes to go. Let's find one that's maybe moving around a bit. US CAD? No. All right, here we go. All right, let's change this down to a 1-minute chart. Let's zoom all the way in. I want to make this much bigger. All right. I don't know what's going to happen here, but here we can see. I just want you to watch. This is going to be quick. We've got 3 minutes and 21 seconds. Do I think the Great British Pound US dollar, is it going to be above this price? It's going down. I think no. I'm going to just go ahead and sell. I just sold one. Where did I try to sell it? Oh, I sold it. Okay, I sold one at 17.5. Okay, I sold one of these. I think it's going to go lower. I think it's going to stay above or stay below here. Now it's trade. Do I think it's going to be above this price? It's got a 60% probability. You know what? Let's go. I think it's going to be above that. Let's go ahead and buy one. So I tried to buy one. There's my bid. I didn't get it. Notice how I'm trying to buy one. I may buy it. I may not. But I sold one of these. I need it to be below here. I'm trying to buy one of these, but I missed. I'm going to go ahead and go to my order, and I'm going to, oh, I just bought it. Okay, so I've actually got 2 positions on. I sold this one, and I bought this one. Now, I don't know what's going to happen. I'm watching. Now, the one that I sold, you know, I might let that one go to 0. All right, I might. But the one that I bought, I'm in trouble here. Do I want to just go ahead and get out? I could just go ahead and sell it. I got out, and I'm out of that position, but I still have this one. I think I made a small profit on this one. Now it's coming. I don't know what's going to happen. You can see how the volatility, there's still 1 minute and 39 seconds to go. If I just want to buy this one back, I simply click on my order. It populates the order ticket, and I send my order, and I bought it back. All right, I traded both of those. Now I did that quickly. I'm going to do that much more. I'm going to do that much slower. I go into my 24 history. I was kind of curious what I did. I bought one at 58.25, but I sold it at 50. So I lost $5 on that one. And this one I sold. Where did I? Oh, I'm trying to see what I bought it back at 9.75. Filled. Oh no, I bought it 53.5. I sold it. I bought it. Bought it back. Okay. Oh, I sold it 41 and bought it back. So I actually did okay there, I think. Anyhow, you know, I'm trying to do that while I'm looking. By the way, notice with 24 seconds to go, the markets all went blank. Okay. Now, why did the markets go blank in the last 18 seconds? The reason the markets went blank is because nobody knows what's going to happen. I'm watching this now. Look, it looks like the ones that I traded are both going to go to 0. In fact, this is going to go to 0 because it's got 2, 1. Here it is. All right, I had originally bought this one, and I sold it back out. This one I sold and then bought it back. But eventually it settled below both of them. Both of them went to 0. Both of those went to 0. Now, that was fast. I know that was fast. let's go back to the markets. Notice how that 5-minute reset, I'm going to hit refresh. I refresh my markets and we get another 5-minute window. There's 4 minutes and 30 seconds, and this all starts over again. What do I think is going to happen? These probabilities, now let's move this chart down a little bit. The at the money one is now here. All right, now this is the one that's, so if you want short-term price action with things jumping around a lot, 5-minute binaries could be the one for you. I mean, you see how quickly these things move, right? And how quickly when the market turns. And the reason is because these strike prices, the condition levels are close to each other. Now, I do not always place 2 trades. I was actually showing you that you could. You can do 1. Mostly, you could just do 1. Do I think it's going to get above the, and let's go through this again. I'm going to, you know what, I'm going to do this a little slower. I'm going to sell 1 at 33. Oh, I might have missed my chance. Here's my order. Oh, I actually did sell it. Look at that. I sold 1. Let's look at my price. Okay. I sold 1 at 33. It's now going higher. All right. Now I sold this one at 33. All right. And let's just stick with 1. We're going to go through this again. There's 3 minutes to go. I sold 1. Notice that when I'm in my orders, I can click on my order and amend it or delete it. When I'm on a position, if I want to close this position, I simply click on the position. It's going to populate the order ticket for me to close the position. Now, if I really want to get filled, I might have to change this to a market versus a limit order. But I'm going to wait and see here. I sold it at 33. It's definitely above. Am I comfortable? Do I want to just buy it back and take my lumps? I could. All right. I could just place a trade and buy it back. All right. I'm going to place my order, and I just bought it back at 50 something. Now, should I have waited? I don't know. Look at this now. Oh, it's coming back down. Maybe I took my lumps and I could have maybe done okay. I don't know. You know what? Maybe I changed my mind. I think it's going to go higher. All right. If I think it's going to go higher, I can always just try to buy. Now I went the other way. All right. Now I bought 1. Okay. I bought 1 at 47. And look, it's going my way. Now, if I want to sell 1, I bought it at 47. Maybe I want to sell it up above at 67, and I'd take a $20 profit. Okay. I just placed an order to sell it at 67 above. Oh, and guess what? I sold it. All right. I bought it at 47. I sold it at 67. Now, did I need to sell it at 67? No, I could have hung on hoping to get those last $33, but there's still a minute and a half to go, and I don't know what's going to happen. I took my $20 profit. So I just showed you both unwinding for a loss when I was wrong, and I also showed you taking a profit in case I was right. I don't know what's going to happen here. They're still saying right now there's a 65% chance. Notice as time goes on, this keeps going. The percentage goes higher because there's not a lot of volatility. Ooh, and there it jumped. Look at that. I didn't need to sell it back probably, but I still don't know. There's 50 seconds to go, and the binary option above it now has very much come in play. That was a pretty big spike. It looks like this, I'm doing pretty well here. I don't know what's going to happen with this one. And we can wait. I'm going to wait these last 30 seconds to see what happens. I mean, this binary option was just trading 50 or 60. I could have sold that. Here we are in the last 25 seconds and everything went blank. And let's see. I'm curious where this ultimately is going to settle in the next 18, 17 seconds. Oh, look at this. Ooh, this one that I bought, I would have gone to 100, 4, 3, 2. Oh my gosh. And this one just settled at 0. This one settled at 0. It spiked above. You saw, if you had an order to sell one at 80 or 90, you could actually sold this one, and it went to 0 in 30 seconds. this is the price action. This is the volatility. Let me go refresh this now so that wow. And look at this. We're back into, oh, well, we're expired. I wanted to go back to markets, get refresh. Yeah, I mean, you're seeing some real big volatility right now in the pound dollar moving around. This is binary options on steroids, right? And each one of these, okay, I'm going to go, and you know what? This is right. The steps I did, it was very fast. It was very fast, and I'm going to do this. And that was because we were in a 5-minute. Excuse me. I'm going to slow that down a lot. Let's go over to the pound dollar, and I'm going to choose the 7 p.m. contract. This has got 6 hours to go. Okay. And here are the steps again. So this is for everyone. And we're going to take this from a 1-minute chart. I'm going to move this back to a 10-minute chart. Okay. And we could take a look at our chart. And I'm going to look at the strike prices. Now, notice that when there's more time, the strike prices are farther apart. Now, if I thought the pound were going to stay above one spot 37.80, okay, and I wanted to buy one of these, it's offered at 55.5. Maybe I want to buy it at 54. I can put a bid in for 54. Now, I don't know if someone's going to sell it to me. I'm going to place my order. I know that I could lose $54. I know I can, and look at that. Somebody actually sold it to me. Okay, so I bought one of these at 54. Okay, now I bought it at 54. The most I could lose is 54. The most I can make would be 46 because it goes to 100. Now, if I bought it at 54 and I were going to step away, but if it were to jump and I wanted to sell it for a profit $20 higher, I'd sell it at 74. I'd click sell and I'll change my price to 74. Now, does this mean I'm going to sell it at 74? Maybe, maybe not. It would have to get up there in order for that to happen. Now, if I were to sell it at 74, I would be unwinding my long position. When I place this order, I am trying to sell one up above at 74. Now, if I look in my positions below, I know that I bought one. I bought one at 54. Okay? And it looks like it's going higher right now. Hey, that's great. I bought one at 54. And I've got an order to sell one. I would sell it if it went up to 74 and I would take a $20 profit. I would get out early. Now I'm looking right now, and that's, I mean, maybe it goes higher and I can sell it at 74. Now I could wait. If it went higher, my hope is that maybe it goes to 100. Do I have to wait for it to go to 100 and settle? And then me collect that $100, well, I might be willing to sell at 74 and just profit the $20 before expiration because it could get up there and then come back down. I don't know what's going to happen. So this is what you day trading, looking for short-term price action. I can buy and sell these binary options throughout the day. And you can clearly see, I mean, now that the pound dollar is ticking higher, I bought it at let's go ahead and modify this order. Hey, I just bought it at, I know I bought it at 54 and it's getting up towards 64. I'm going to go to my orders. I'm going to click on my order. It's to sell it at 74. Now I'd sell it at 64 and take a $10 profit. I'm going to amend my order. Now I'm looking at my orders again. That 64 right there, that's me. That's me trying to sell it. Now, am I going to sell it at 64? I don't know. Someone has to buy it from me. Remember, this is a demo environment, but I just bought it at 54. If I sold it at 64, I'd make 10 bucks. And instead of waiting almost 6 hours to see what happens and whether I make my you know, when I in this position here, I know I bought it at 54, right? Oop, let's make that a buy at 54. I know I bought it at 54. I could wait to try to make all 46, or I could potentially take a quick $10 profit, and move on to another trade. That's for you to determine. That's for you to decide. I tried to sell at 64. It got close. Notice it got close to this price, didn't it? In fact, my offer was the best offer, and then it ticked down a little lower. So you're learning a bit about how the market works. Am I guaranteed to fill at the price I want? No, but I'm allowed to put that order out there. All right. And if I want to unwind a position, if I bought one, I sell it. If I sold one, I buy it back. I think I got to everyone's questions. I know I went a little bit longer, but I wanted to make sure that we went through those examples very clearly. Because I wanted everyone to see that. I have recorded the session. It will be available both on our YouTube channel as well as our website in the archive section. Hopefully you got a lot out of today. If you've got any additional questions, please email customerservice@nadex.com. Thank you for being here today. Thank you for being a Nadex customer. Anything we can do to help you, we're here to help. And I want to wish you all good luck in the markets. And hopefully you'll join me in the morning for our live analysis sessions on the live stream YouTube. I'll catch you later.